Good morning, good afternoon, and good evening, one and all. Welcome to another edition of this Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious co-host in sunny Dubai. Top of the morning to you, Mr. Stanley.
Hear it? No children. No children. The biscuit cupboard has been restocked. The children are back at school. Well, you'd think so, but my youngest is only in for like 2 hours because it's like, okay, ease him in gently. Ease him in gently. I kicked him through the door when he went to nursery. And then the other one, uh, mate, it's just they're back at school, but they're kind of not. Okay, can you walk down the road for a mile because there's nowhere to park? Yeah, fine, great. 45 degrees and load of humidity, but they're back. It was a nice summer. APPEC.
Come with like a sponge cloth or something, and it can absorb the sweat and the water, and then you can wring it out and it's dry. That'd be a
Yeah,
good invention.
yeah, well, that's called Daddy's T-shirt, I'm afraid. So that's no, it's good. No, they were to be fair, they were bloody brilliant over the summer, and it was very nice. It was quiet. The one thing about summer in the Middle East, that whole demographic that kind of moved over to Dubai, especially the historically everyone's just gone, Rob, I'm going to piss off to Portugal for a month. That is changing now. A lot of people stays, but it's a lot quieter now. The traffic's back, and it will be like that until the middle of April, and then the mass exodus starts again. Anyway, forget me and my traffic woes. Oil,
What about oil?
interesting, isn't it? Right.
I mean, we got pretty much the sideways trading market all month of August. We are coming towards the end of August here. We have 3 more days or 4 more days to go in the month, and the market hasn't really moved much between 66 and 67.
No, look, let me just show that. You can see flat on the day. Look, October Brent, you can see here gap. He goes off the screen on Friday. November still doing pretty well, 60s, all the sixes. Uh-oh, what does that mean? But look, you can look at the history in August. We started off, in the high 60s, and then really since about here, we've stayed pretty consistent, right? Summer
Which
mode activate.
pretty much also aligns with the lack of any tariff input or any type of sanctions input from the U.S. against Russia.
Yeah.
You had the meeting with Alaska with Trump and Putin, and then everything that's happened afterwards, which has been a damn squid. So therefore, there's been no risk really to oil supply in the world, and the market's pricing it in.
Yeah, absolutely. I mean, I'll just say about gas oil, that's the equivalent of $89.50 a barrel of diesel. Gas oil refining margin is still doing very well, or robust, as an analyst or 10 would call them. Um, yeah, look, I mean, politics, Trump, there isn't a day we know that he's never in the news. Today's Indian tariff day. Tariffs have been 50% on some Indian goods have been implemented in the US.
Yep. The increase, the penalizing tariff on India because of their utilization of Russian crude in the refining sector.
Yes. I mean, India actually, it's a public holiday today. It's not called Tariff Day. Just want to clarify that. It's a holiday in Maharashtra, so the country's off. But, you know, everything that's going on, interest rates, we're going to talk about that later. I know Donald, ceasefire talks, Israel, Gaza, what happens there? Um, Russia, Ukraine. I read this morning that Russia have taken. I want to say it properly so I don't mess it up because you know me and my mouth. Ukraine admits Russia has entered key region of Dnipropetrovsk. See, smooth. Told you. So I don't know if that, is that significant? I don't know. I don't know enough about Ukrainian geography, if I'm honest, but it's certainly not a dilution of tension, is it? But the market, all markets, you can see that sideways movement. I know it's August, but everything's kind of been shrugged off, hasn't it?
Well, I mean, I think the world has gotten used to the war in Ukraine. The world is, lack of a better term, have gotten used to what's going on in Gaza with Israel, and it doesn't really add any to the geopolitical risk. I mean, the risk that's actually happening in the Russian-Ukraine conflict is Ukraine has been fairly strategic in hitting Russian oil export capacity and Russian oil refineries.
Yeah.
There was a report out on Reuters yesterday that 17% of their total refining capacity was offline, which is about almost over 1 million barrels of refining capacity, which is significant. Other reports showing that there's rationing of gasoline in Crimea, rationing of gasoline in the eastern provinces of Russia.
Yeah.
So they are, Ukrainians are taking it back to the Russian economy by attacking the oil infrastructure, and that's probably what needs to be done in order to bring all parties to the negotiating table in good faith.
Yeah. I mean, can you see this? This is our Russian oil exports to rebound. You can see that.
Yep.
So yeah, just on that, we wrote this. Homi and my colleague wrote this on Monday. So yeah, look, we've got Ukrainian drones have forced offline some of Russia's largest plants, including Rosneft, and Volgograd. An estimated 750,000 barrels of capacity offline, or about 10% of total runs. But you can see that, look, Russian oil has been at the center, blah 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 blah, not blah blah blah. It's important, but yeah, look, we see seaborne exports rebounding to 3.6 million barrels a day in September. So, like you've always said, oil will find a way. And it will. It's not, it's not like, this is, look at this, Russian seaborne oil exports by destination, August, obviously we're not over yet. But the percentage of Indian buying has dropped off, but the percentage of Chinese buying has increased. So,
Mhm.
you know, where does it sit in the political spectrum? I don't think China care. I really don't. I just don't. I just do not think that it's
Well,
even.
it's telling to see that the U.S., when they want to punish users of Russian oil, I mean, there was a big statement by Donald, we're going to punish those people using, and the only country it goes after is India, because India has the least economic impact on Russia, on the United States, where China, if you did the same thing to China, it would have a far greater impact on the U.S. because of trade flow. So therefore, China is conveniently excluded, as are some of the Middle Eastern countries who import Russian fuel oil. They're excluded from the tariff tantrum, and it's only India is the only country that really gets impacted by it.
So
Um,
do you think there's a sort of economy? Of course, there's economies of scale when he's looking at it about who and how much tariff to apply to a specific country because only going to have a detrimental effect on his own economy.
well, I think there's a bit of that. I would hope there's a bit of that calculus because when you look at the percentage of GDP that India exports to the United States, it's a very small percentage of the total global trade that India
Yeah,
does.
yeah,
India primarily has always been has done more trade with the Soviet Union and Russia than with the United States. And India is also, far larger trading partner with the regional players in the marketplace. So, uh, putting 100% tariff on India would have some effect, but it's not going to have a detrimental effect, and it's not really going to impact the U.S. economy.
yeah,
If you pulled the same card and put it onto China, okay, that would be huge because there's far more trade flow between China and the U.S. than there is between India and the U.S. But if
okay,
you take all the other countries that are importing Russian crude or Russian oil, let's just not talk crude, let's talk about oil in general. There's a lot more flow that's being imported, yet there's no mention of any type of detrimental sanctions or any type of push pressure being put on those countries to stop doing it. Saudi
yeah,
Arabia gets a pass, Turkey gets a pass. Um, some of the EU countries that take Russian crude get a pass. It's only
yeah.
India.
No, you're right. I think, yeah, and it goes to show, the cards, the cards that he's playing. But let me ask you this. I mean, coming into APPEC, stories that we've got. Okay, I know we'll cover it a bit more detail. Jackson Hole last week with Powell and the Fed signaling. What did one of my colleague read? How did he put it? Powell opens the door to a resumption in monetary easing at Jackson Hole. Risk markets embrace a dovish Powell tilt, but sticky inflation is a real risk in the coming months. And you look at cable, dollar sterling. It's kind of it moved a bit, but then it's kind of settled back down to where it was. I don't think markets are looking at that as a focus coming into APEC. The Indian tariffs. I would say, look, we're flat on the day. I don't just because it's tariff day in India. I don't think that that's going to have. So what is that that one point. I mean, you made the point earlier on around China. If tariffs if tariffs are enforced because China continue to buy in Russian energy, that to me feels like that would be a needle mover for oil markets because nothing else has really
Well,
held up.
well, it would be, and how big of a needle mover is it? Because, okay, how much of China's imports are coming from Russia right now? I'm going to say it's over 50%, just off the top of my head,
What?
uh,
Sorry, on what?
on Chinese imports of crude oil. Because currently, I think they import roughly 4 million a day.
Yeah, well,
Um,
if only we had a system that could show us that.
if only that existed. There could be a marketing plan with that.
Yeah, we'll put something together. Yeah, go on. Sorry.
But so if China's importing 5 million barrels a day, Russia exports 2.5 to China, and the U.S. decides to put tariffs on China for processing Russian crude. Well, when you start looking at that run rate of refinery versus crude imports, they've been building stock according to some different analysis on that.
Yeah.
So is it just a non sequitur? And it's just like, okay, fine, they stopped bringing in Russian crude, they got plenty in inventory, so no big deal.
Well, let's look at this because this is an important point actually. So in August, this is on predictive data that we've got because obviously August isn't over yet. And there's lag between when we actually sort of lock in what the actual number was when we get data from different sources. So at the moment, 11.64 million barrels a day of crude and condensate imported into China, right? And I'll split this by origin countries. So we go into August. Look, I mean, what 11.64? I mean, this Russia is still not the biggest. Saudi 1.3, Iraq 1.2, Brazil 1.5. So Brazil are currently China's biggest supplier of crude and condensate. So this is quite a sizable number. I mean, I think you have to probably go back to here. We've got 11.64. Last time it was that high was August 2023, so that's a 2-year high. But let's go back, say, 5 years and see where that number sits. I mean, that's a 5-year high.
Hey man,
Now,
I was way up on the import number.
well, that's all right. That's why we have ways to help us to go back to all data. But this is significant. This is this is the second highest on record of crude and condensate imports into China ever. This, I think it is the highest. 11.5. Let me guess, that was COVID. Yeah, that would have been when COVID.
That's COVID, yeah.
Yeah, that was COVID. This is on our data that you stumbled across something here by accident, I think, Rustin. Very well done. 11.64 million barrels a day is the highest on record that we have. Our data is predictive data. Don't write in, don't shoot the messenger. So that's the highest on record imports into China of crude and condensate. And Brazil is it Brazil? Yeah, 1.54. There's others as well. You can see we only populate the top 10. Others will make up everyone else, right? I mean, what do you think about that? I mean, let's go back to let's do 18 months to give us some context for the purposes of coming into APPEC. August 2025, 11.64. August 2024, 1.1 million barrels a day higher year on year, August imports versus last year. Now, we knew what was dominating I use it again, the avenues and alleyways around Boat Quay was Chinese demand. Chinese demand is 10% better than this time last year if you look at crude and condensate buying. I mean, what do you think on that?
Well, it's one thing about how much are they buying versus how much are they processing to make finished goods.
Okay.
Because that to me is that's how if you're bringing in 11 million barrels a day of crude plus you have your internal production of around 3 to 4 million barrels, yet you're only running 12 million total. Well, then you're building stock.
Okay, well, I can do that as well. Should we have a look at that? So,
Yes,
and
because I think that is where your question is where is the crude going?
yes. Yeah, you're right. I mean, I'm going to do all of them, condensate, everything. Um, Well, we've got in runs China 13 points. So August, we've got 13.8 million barrels a day of runs, and we've got, yeah, 11.64. Runs are still pretty high, not as high as they were last year. But yeah, you're right. I mean, look, this is where matching the data up is part of the the jigsaw puzzle, right? But do people get into the weeds there when they're reacting in markets? And I want to talk about this disconnect we're seeing in markets right now, which is always, physical players versus the financial players. That disconnect is always there. Fundamentals are largely ignored. But when you're talking about people looking at a number like, oh, China have just imported the highest number of crude and condensate ever, the market will cheer that. They won't say, well, okay, what does it actually mean for refinery ones? What does it mean for stock builds, etc.? They just look at that baseline number, right? That China are like buying stuff. The world is good, right?
Hmm. Sure. Because, from a demand perspective, it says you have steady demand from Asia. If you look at the chart again, if you want to pull that chart back up again of imports, you
Yeah,
can see that their import level has remained fairly steady between 10 to 11 million per day.
yeah,
Especially if you look at it over the last 18 months there. I mean,
yeah,
it's a fairly flat import level. Yeah, a couple of dips in July and in December and January, but for the most part, it's been hovering right around between 10 and 11 million.
yeah. Yeah, I
And
know,
so,
but when you're looking at these kind of numbers and on that scale, it is relative because between 10 and 11.5 million barrels, it's still 1.5 million barrels a day. I mean, that's well, if OPEC were to cut the production by 1.5 million barrels a day, that would certainly move things. So China buying, close to 1.8 million barrels higher than they did in Feb is still significant, even if the range is fairly flat when you're looking at it from that point of view. That's how the market would react to it, right?
yeah, I mean, and if you just look at that, of the OPEC countries, how many are going into China? You've got UAE, that's 600,000, Oman, 500,000. You've got Iraq at 1.1, Saudi at 1.4, 1.5.
You're right.
So a significant portion of Chinese imports are OPEC related.
I wonder why the uptick in Brazilian volumes. Looking into crude and condensate imports, it was that August. That is a significant uptick in Brazil. I'd need to look at that because that's a doubling in a month. Is that the pivot to different origin countries rather than Russia? Because what did Russia in July was 1.25, in August 1.1. That's not significant, but the
No.
Brazilian volumes are.
Well, I mean, that could also just be the fact of, the Brazilian price versus what they're getting, was far more attractive because, China is still a price sensitive buyer.
Yeah. Okay, well, look, enough of me giving free information away on Kepler. I'm sure I'll get shouted at. We'll do that again next week, people. But look, talking about where we are on prices, article this morning, Goldman Sachs came out. You sent it to me. It was
Predicting oil prices in 2026 to be in the low 50s.
to load by late 2026. We expect the oil surplus to widen and average 1.8 million barrels a day, resulting in a nearly 800 million barrel rise in global stocks by the end of next year. We see roughly the same, maybe not as much, it's quite a lot, but I think we've got about, I covered it last week, 600 million barrel rise. We covered it in our crude, I think it was our crude weekly, crude oil barrel, I can't remember, yes. 600 million barrel build by the middle of 2026. That's a lot of oil.
Well, you have it by the middle, and they have it by the end. So probably roughly the same number.
Yeah, probably. The S&D balances are hard to argue with, right? But or forecast on, where things are coming in. When you sort of reference that back to where markets are trading, everything's fine. Like, what is
Well, I
this?
mean, despite the backwardation in the front end of the curve, I mean, you start looking at the curve from 2026 onward, it's relatively a flat curve. So, I mean, the market is, I would say the market's probably anticipating that there'll be some um, carry that's going to develop in the market. How much of a carry, who knows? Because it really depends on how much materializes. And again, it's, how much SPR buying is going to maintain. But if you look at crude oil prices from, Jan 26 is roughly 95, 91. Jan 27, 60,
95.91, 65.91.
65, no, excuse me. Got to learn how to read too. And Jan is 65.54. And then Jan 2028 is 66.05.
But I
So
mean,
you've got a
we
relatively flat curve over the next 2 years.
we touched on this last
Despite,
week, didn't we? Because once the sell-off, if because everyone's anticipating there will be a correction in prices, all the curve comes down linear with that front month sell-off, right?
well, it depends on how much of a stock build actually starts to become realized in the front end of the curve. I mean, it's to say, okay, if you've got this 800 million barrel increase over stock, so if you have this stock build up, in the front end of the market, the front end should discount and start coming off harder than the back end of the curve because, again, contango develops because your front end supply is far greater than your front end demand.
Yeah,
And
yeah.
I don't think you won't see a linear sell off, but again, it has to be something that starts to materialize and actually starts being physically seen. And it hasn't happened yet because I mean, I think people have been predicting stock builds to start here coming into Q4, which aligns with APPEC because we'll start getting into refinery turnaround season as the summer driving season comes to an end, and we'll see how much actual crude stocks start to build
And summer driving season in the US officially ends on Monday, right?
on Monday and Labor Day this weekend.
Yeah. Okay. So it's like this is the last hurrah in the States for driving. It seems to be holding up all right. It's done all right. Driving season's been okay. I mean, not much has been written, which is probably both. But answer me this, and I'm playing devil's advocate here because I can answer this as well. I think, um, as well as you. I mean, if everyone is signaling a massive surplus in the market, S&D balances are going to go through the roof. Why haven't traders put positions on accordingly? Why is flat price structure so resilient against what the physical fundamentals are saying?
I think it's a case of it hasn't materialized. And
In the
what is
front.
it? Well, it just hasn't materialized physically. Physically, the build has not started to show. And as we just showed you, China's imported 11.6 million barrels last month. This month, almost 11 million again. So if China's consuming that, bringing in that much oil and putting it in tank, they haven't stopped buying incremental crude yet. So if they're building their commercial reserves and their government reserves until they fill those up, it's not going to back out into the market. I mean, you have to see that slowdown in purchasing from the end user of the crude oil, the refinery, in order to start pushing the front end of the curve lower because you don't have buyers for the amount of supply that's available in the market.
Okay, so I mean, in terms of a trigger point, then once I mean, you're sitting on a trading bench, right? You're sitting on a trading bench, and what is that? What is that report or article or piece of data that comes in that makes you go as a desk, you collectively decide it's time to start selling.
I think it comes into you might want to see some momentum on the sell side start showing up. You might want to see more option selling down the curve. People buying puts because that should signal that sends a signal when people start buying protection for a market sell off. And I think that was something that popped up last week. More U.S. shale producers are coming into the options market or coming into hedge forward production at these levels. And so if you start seeing that type of selling pressure coming in the back end of the curve, that will accentuate the backwardation in the front.
Yeah.
Because if you're not selling the front, you're selling the back. It's going to push the back end of the curve lower, but it does start sending a market signal that people are expecting this is a peak in price.
Look, I find it fascinating because, you know, what we try and do on this podcast, like, comment, subscribe, is to sort of talk about, what our experiences are on trading benches or broking or whatever it might be. In what, if you're not privy to that, what it, how it all works, how it all ties together. And, when I'm looking at the backwardation on the Brent curve, seasonally, seasonally, in the summer, Brent goes into steeper backwardation because it's the supply and demand balance is in a deficit, right?
Well,
Markets don't start.
and
Sorry,
that's
go on.
usually because refinery runs are running at high levels,
Exactly.
95, 96% utilization. Therefore, your demand profile is higher.
Yeah.
Brent has its own issues because of the declining production in the fields and the lack of investment by the UK government in producing more crude or allowing more crude to be produced. So you do get that big imbalance that can happen between the supply and the demand.
Yeah, exactly. But that's always a signal. Sort of look, if you're looking sort of March, April onwards on the Brent curve, it's always a pretty decent buy because it's always around flat. And that's how markets are pricing it in right now. Markets are not pricing in a massive supply glut,
No,
but everyone's predicting one.
even though it's supposed to materialize here in Q4, we're already in October, October Brent, and
Yeah.
we still have, the OCTEC is still a dollar backwardated.
Yeah. Well, look, I mean, it's gonna. I think it's gonna be for me going into APPEC Tuesday. We're gonna get together at a bar around Boat Quay, aren't we? Sort of late afternoon, evening. We'll be around for people who want to join
Yes,
us.
enjoying some
Um,
libation. Yes.
and then obviously there's loads of forums going. But to me, the sort of theme going into APPEC this year is one of like, I'll listen to what people have got to say. I don't think there is a common theme at the moment. If you're OPEC going into APPEC, OPEC going into APPEC, you have pined for a market that is relatively well balanced and prices are relatively stable. We are in that environment right now. That is job done OPEC. There's always this underlying, fear that markets are oversupplied or demand isn't there. It hasn't materialized so far this year, which is prices have been robust. But I'm interested to see what a lot of the traders are going to say during APPEC because I don't think it's been a great year for trading because volatility just hasn't really been the odd spike here and there. But I think it's been a pretty flat year if you're a trader. Would you agree with that?
I think the trading has been very tough this year, and I would disagree that the volatility has been there in the market, but it's not volatility being brought about which normal trade flows would bring. It's volatility that's been brought about by the tweet or by the executive
Right.
action by the U.S. president. That's
Yeah.
where the volatility is. So that becomes almost a unpredictable, I would say, mini black swan events throughout the year so far, where things happen and people are caught flat-footed because, oh, Trump has just said this. Oh, look, markets are collapsing. Oh, Trump said that. Oh, markets are rallying. And so you can't really trade off of presidential tweet stream. Maybe you should. Maybe that's where an AI program could be set up to monitor the presidential tweet and trade accordingly.
Yeah. Let's see. Anyway, yeah, look, good to see you. We won't record next week or the week after. We're 2 weeks off because of APPEC, right? So
Yes, that is
we'll
correct.
we'll see lots of people, be face to face if anything, and I'll see you in Singapore, my friend.
Yes, yes. We look forward to seeing you all. You can catch us all at Boat Quay. If you want to come down and have a chat and debate markets and tell us how wrong we are or tell us how right we are, or just enjoy a nice cool beverage in the hot Singaporean humid night.
There you go. There you go. Okay, mate.
All right. Well, thank you all. Click like, comment, and subscribe. Catch us on YouTube, Spotify, and LinkedIn. And we look forward to seeing you all in person in the next 2 weeks.
Ciao.